All right, I hear the bells across the street ringing, which means it's 6 o'clock, and since we're trying to make these things happen on time and like clockwork, we will get going. Thank you for coming. I was a little worried this afternoon when I saw that there were some pretty serious snowflakes flying. Thought that might scare some folks away, but thank you for still fitting us in, and appreciate you doing that. Might be a couple of folks still come walking in here yet, but that's fine. For those of you who don't know me, my name is Rick Brimacomb. On behalf of the Network Connect, welcome to another session in our series of the reverse elevator pitches. Tonight you're going to hear from a panel of investors as well as entrepreneurs who have a history of growing and investing in businesses. We're also going to learn about their individual criteria for getting involved in companies. And that was the whole idea behind these reverse elevator pitches, is to, rather than have a bunch of businesses parade through and say why their deal is great and why investors should invest, turn that around and hear from the folks who do the investing as more of a kind of educational story sharing, background sharing session. Dick Summerstead came up with the original concept for the Network Connect back in 2011, and he and I started working together in 2013. As I mentioned, we've been doing these now for 4 years. The concept was to create a platform to connect folks outside of the random emails or phone calls that Dick and I got. So we put our networks together and tried to create a platform, that being the Network Connect, for folks looking for money to find that money, or someone looking to fill a position at their company to fill that position, or for investors looking for investments. But the idea of connecting people and trying to facilitate those transactions to help businesses grow and to act as a catalyst within the emerging company ecosystem here in the Twin Cities and Minnesota, although our network in terms of investors go far beyond that. We have investor networks, angel groups, venture firms, some private equity firms from all over the country. Dick standing in the back. Hey Dick, how many different states do you think we reach with the network of investors? Putting him on the spot, we didn't. I'm off script on that. You have any idea how many states we might reach?
How many what?
States we might reach on the number of different investors, angel groups, venture firms?
About 650.
No, that's the total investors, the number of states. Are we across 20 different states, 30 different states?
The investors in our network are from all 50 states and about 20 countries.
All right, so we have about, as he said, about 650 listed investors in the database, but that doesn't mean that's all the investors that we touch, because we have the heads of the different angel groups listed as one person. So Dave Russick is in there as Dave Russick, and in theory head of Go for Angels, but doesn't cover all 70 of the people that are in there for Go for Angels. So we think the reach is about 10 to 1. So we think in terms of investors, we probably have somewhere in the neighborhood of about 6,000 people that we reach, the heads of those groups. In terms of the business email that we send out, we touch about 35,000 people with that. So we have a broad distribution list there. And in terms of money raised, we kind of rely somewhat on us reaching out to them, as well as some self-reporting, which doesn't always happen, but I would say at least is 5 million and potentially a lot more than that, because every once in a while we hear that they got money and it's like, well, you didn't tell us and you're supposed to, but whatever. Anyway, there's a bunch of folks in the database. We have a broad reach, and these panels are set up to give you a wide range of perspectives. We're today lucky enough to have an angel investor, a venture investor, and a private equity investor, so you get a whole myriad of perspectives. But before we get to the panel, first I want to say thank you to our sponsors. We have a couple of accounting firms, Olson Thielen CPAs. We have Mike Brimacomb over here, Wilkerson Guthman. Let's see, where we have Ron over here, Ron Lenz over here. And then Schwegman Lumber Woosner is an intellectual property law firm. I know we had somebody on the RSVP list, but I don't see him here. Clean Tech Open, I know we have somebody here from the Clean Tech Open. We did.
They went back to their reception. They were having a reception.
All right, well, the Clean Tech Open is a sponsor, and for folks, and is there free alcohol? So Clean Tech Open, if you don't know, is very similar to the Minnesota Cup. We have the Midwest kind of branch, if you will, here in Minnesota. And then Mojo Minnesota is a group I belong to, kind of like the Network Connect. We're trying to facilitate innovation, job creation, entrepreneurship in Minnesota. Without this happening, without the sponsors' support, this would not happen. So for Mike and Ron, two wonderful accountants that I've worked with personally, these things wouldn't happen. So thank you for your support, and the extent that you all can support them, please do. Okay, so connecting with the group, the Network Connect can be found at thenetworkconnect.com. There's also an email distribution list if you'd like to be added to that. Let me know. And so with that, I'm going to do a quick introduction of everyone, and then I'm going to let them spend a little bit more time coloring in the details on their backgrounds. So starting to my immediate right, Paul Moffatt is Director of Business Development at Encore One. Paul represents, as I mentioned, the view of the private equity world. And for folks here in the audience, Paul would be more interested in companies that are further along. So we got kind of the later stage, early, middle, early, going down the panel here. Encore is a Minnesota-based diversified holding company that invests in lower middle market and middle market platform companies. And for those of you who don't know or haven't heard of them, it's a family office. Family office world lots of times doesn't do a lot in the way of marketing, so they're a little bit under the radar screen. So we appreciate Paul.
We don't even have a website.
Paul sticking his head out of the foxhole, and we actually get a chance to see him here. One of those mysterious family office guys. Anyway, before joining Encore, Paul has worked for 15 years in the banking business, most recently with U.S. Bank, and we've had a chance to interact on a couple of projects recently, so appreciate you coming, Paul. Ryan DiBrito is General Partner at Technology Venture Partners. Ryan, as I mentioned, represents the view of the venture capital world. Ryan and I met a number of years ago while he was at the Carlson School of Management, and he's been at TVP since 2004. If you don't know of TVP, also kind of like hanging in the foxhole or hanging back a little bit, they actually have $100 million under management and are close to raising another fund, which Ryan is going to tell you about. And so they kind of worked through the latter part of the last decade when the economy got tough. They hunkered down and focused on their companies, and so that's why they weren't doing a lot of new investments, but now they're kind of turning that corner and focused on finding new investments. So I'm not even sure, Ryan, have you even kind of mentioned that out publicly yet?
Not terribly publicly.
Okay, so you can't, bring that outside of the room quite yet, but for you all sitting here today, Ryan is close to raising another fund, which he will tell us all about. And then Anish Das is Managing Partner of Medgineering. Anish represents, again, kind of the view of the angel investor. Anish and I also crossed paths at the Carlson School, and then we reconnected recently as he was looking to make angel investments. His business, Medgineering, is a med tech consulting firm, and they've also developed an online expert marketplace called QuickConsult. And so I purposefully put this panel together to have a wide range of perspectives. And as I was mentioning to a gentleman who had a startup company out in the hallway before this, while private equity isn't the right fit for him today, doesn't mean it won't be in the future or he can't listen from that. So you got three different unique perspectives here, and that's a nice opportunity to have. So why don't we start at the far end with Anish and then work back this way and maybe just call in a little bit more details as far as your background.
Sure. Can everybody hear me?
Yeah.
Awesome. If you can't, there's some seats up here. So maybe the best way to give some background is just to share what I do on a day-to-day these days, and then also what investments I'm involved in. So on a day-to-day, most time is split between 3 endeavors. One is engineering. It's a medical device industry consulting and staffing company with this online expert network. Another one is actually a concert promotions company. And then the other one is a corporate advisory firm in the international and domestic space of mergers and acquisitions, turnarounds, stressed and distressed manufacturing companies in that space. And each take up a little different piece of time and how I'm set up in those. In terms of investments, I'm really industry agnostic, so I've invested in the companies that I'm a part of on a more day-to-day basis, as well as an electric vehicle company out in Eugene, Oregon. Got into it before it went public, and then in September it went public, so that's nice. And then also a software company in the medical device space out of Ohio. The kid actually was a student at Ohio State, and then took a sabbatical because he'd won a number of global competitions, and also got investment from Mark Cuban's Radical Investments. Mark Cuban was the lead investor, so that one's still moving along. And then a handful of software companies in Minnesota, some in the weight loss space. One is for venue and event management, and those are just a handful. So that gives
Great.
a little bit of background.
Thank you. Ryan, tell us a little bit about your personal story.
Great. Well, starting at the beginning, I guess. From Minnesota originally. I grew up in Cold Spring, Minnesota, small town up north. Came to Minneapolis to go to the University of Minnesota. Got my undergrad and then later my MBA there. And I really got my first exposure to venture capital in 2001. So it was kind of between my junior and senior year of undergrad, where I had the opportunity to intern at Technology Venture Partners, my current firm, and really, quite frankly, learn how to spell venture capital. Really started to connect the dots with things I thought I knew at that stage of my professional development and what kind of reality was, in the marketplace. And from there, spent a couple of years working for Honeywell in their aerospace division, and had the chance to rejoin TVP as an associate back in 2004. And roll the tape forward, I guess, 13 years to now investing partner. It's been a pretty wild and dynamic experience. Fortunately, we've been able to survive, as Rick mentioned, the tech burst, the Great Recession, and really get our portfolio of companies to a point of success. So we're very pleased with that, very happy with that, and starting our investment cycle over now with our next fund. And maybe just to connect some of the dots, Rick mentioned, our first fund was a mix of hardware and software, but all IT focused. And this next fund, just given the current climate and investment opportunities out there, will be more software oriented in IT, but we will do some healthcare related investing. Probably less, medical device, that's just not really where our bailiwick is, but extensions of data analytics, HIT, I mean, there's some tremendous opportunities there. So that's a little bit about me.
Great. So Paul, tell us a little bit about yourself.
Yeah, all really interesting. And in advance, I'll apologize for my voice. I'm fighting a cold since the weekend. Halloween trick-or-treating didn't help with the kids. But my background is 15 years in commercial banking. It started in Chicago, and I was with a pretty good-sized regional bank there. We were sold eventually to Bank of America, at which point, we all left. If you know anything about banking in Chicago, if you're 5% market share, you're pretty big. So you've got to trade on something else other than just the dollars. It's all about service. So anyway, went to a smaller shop, but got a lot of experience there, particularly in the world of sponsor finance right in 2008. So instead of originating new transactions, I was babysitting and working out, much like you did, surviving the recession during that period of time. But it was a great experience and got an MBA. In the meantime, I had met and married a girl from St. Paul. So a couple years later, our family's expanding. We move up here 3 years ago. Continued to work in commercial banking at U.S. Bank, as Rick mentioned earlier, and then was connected with this group, Encore One, which, as he mentioned, is essentially the private equity arm of a local family office here in town. And they were reinvigorating their marketing efforts sort of post-recession, and it was a unique opportunity for me to get on the buy side of the transaction, still serving the same middle market entrepreneur, business owner, seller, and management team. And with being able to benefit from the skills I've developed, just business development, understanding capital structures and marketing to middle market business owners, was able to carry that on. So our efforts have been reinvigorated for the last 7 months or so, and there's plenty of activity out there. And it's an exciting time to be a private equity investor. There's a lot of baby boomers otherwise looking to exit their business, and even some opportunities sort of in the earlier stage, maybe not venture, certainly not angel, but opportunities to get involved with those kind of companies as well.
Sure. Why don't we stay down here, Paul? Give a little bit more background into the investment group. How's it work? What are you looking for? What's the kind of sweet spot so far?
Sure. So I'll try to speak without a ton of bias towards the family office, but just about private equity in general. But the way we're set up is sort of fundless in nature. We've got funds that are kind of earmarked for our kind of investment profile. But generally a private equity fund would have a fund sort of kind of designated to particular investments. We're looking for companies that are 4 to 10 million in EBITDA, generally pretty well established. They've got some history, more than 5 years of operating history and profitability, and probably pretty stable cash flows, and aren't necessarily looking to hit the home run, but they're good, stable businesses, good management teams. People are important. Philosophically, I think that need to sort of jive and appreciate our long-term view of the investment as well. Other than that, it's pretty broad, lower 48 states, kind of non-cyclical. I should mention in our case, because the origin of the family wealth is in construction and real estate, we're looking for businesses in our case in particular that are counter-cyclical to real estate and construction and development, no building services companies, or building supply companies, for example. And otherwise, they're probably not going to be professional services or really high-tech companies necessarily that rely on a lot of innovation for growth. They're just going to be, more mature kind of industrial service companies, manufacturers, distributors, that kind of thing.
And there are 1 or 2 specific verticals that your shop has invested in.
Yeah, so currently we own a couple of businesses, ones that we got into pre-2008, sort of pre-recession. One's a sort of diversified facility maintenance company that is, essentially industrial janitorial services is really where their roots are, but it's grown into, also providing security services, as well as, HVAC monitoring and that kind of thing. It's a business here in town called Marsden. You can find them on the local book of lists. They're a pretty large privately held company that we've owned for 15 years now. It's done 35 follow-on acquisitions since we bought it in 2002 and grown 4 times its original size. So just because I keep using the word, mature industrial companies doesn't mean they're sleepy and never going to grow again. And then another one is called General Parts. It's in Bloomington. It's in the service and distribution of replacement parts for food service, kitchen equipment. And they've grown significantly on a different scale, but also 3 times their original size, and they're serving companies in 36 states. But can service national food chains, quick service restaurants, that kind of thing, as well as mom and pop bars and restaurants in the communities they're located in. So those are kind of 2 of the existing portfolio companies. We've been sidelined, I'll say, from 2008 to 16, as you might imagine, with Opus being the origin of the family wealth, and being a real estate developer during a recession was a challenging position to be in, but that's sort of behind us, and we've reinvigorated the marketing effort, and hence my role as Director of Business Development.
Thank you. Ryan, tell us a little bit more about your shop and what TVP is looking for, how it works, folks that are involved.
Sure. So I'm classically structured venture capital fund. 10-year limited partnership. We'll be seeking new investments for the first 4 years, and obviously supporting that portfolio through its liquidity. There's 2 investing partners here locally, myself and the founding partner, Bryson Holloman. And we also have 2 venture partners on the East Coast. And our team is kind of a mix of finance, strategic M&A, investment banking professionals with your kind of PhDs in engineering functions and higher order technology understandings, and we kind of work in a participatory way to really evaluate investments and kind of bring our collective skill sets, to bear to evaluate a company. As far as our focus, I say it's early to mid stage, and the first question I usually get from an entrepreneur is, well, what does that mean? And I will broadly define that as kind of Series A, Series B. But really the role that we're trying to fulfill in the Minneapolis market as well as our other key geographies is that first institutional money or next institutional money after high quality seed round or angel financing. So we don't have the thresholds that some funds do where say, hey, if you don't have $5 million, come talk to me in 2 years kind of thing. I mean, I think my perspective is that kind of limits the companies you get exposed to and the type of entrepreneurs that are out there really looking to kind of get to the next level. So I would say we don't have rigidity with respect to you got to have certain revenues or ARRs or what have you, but we like that base kind of market understanding, the market adoption, and maybe some initial revenues or key partnerships or things like that basically say, hey, we've taken this from proof of concept to some type of commercial opportunity that we can identify and understand. And from there, it's the art of venture investing. It's really a partnership between the entrepreneurs and the investment folks around the table to get the company to a point of success. And every company that I've been involved with here over the last 13 years has never been a straight line from investment to success, and you have to be prepared for that. And the investors have to understand that as well as the entrepreneurs, and you got to be able to work together. So. That kind of symbiotic relationship and partnership are pretty important to us because ultimately it at least gives you the opportunity to be successful when the market moves against you and you have to shuck and jive in some respects.
Anish, tell us a little bit about your investing background, how you do it, and if it's the investment committee of one, that being you, how you manage kind of your own process.
There's a lot in that one. So the way that I look at investments is there are different angel investors that do it in different ways, but I have kind of overlap with different investments that might have some VC backing depending on how that company is set up and what types of investments they are looking to take on or they're willing to take on. There's not really a whole bunch of overlap with private equity because private equity, more substantial cash flows, larger valuations, want larger check sizes. And so a lot of times private equity, the institutional money or just different money. And that'll be supporting that. In terms of the process, some of my process is a little bit of a following mentality. So there are a number of folks out there who have acquired or been more successful than I have. And so one of the ways I look at it is there an opportunity to support opportunities that I think are worth supporting, but that there's a level of pre-vetting as well done by some of these other investors. For example, the company in Ohio, if Mark Cuban is investing, he's done fairly well. So his analysis and due diligence process could have some merit to it. So that's one. The one out in Eugene, Oregon, is Bill Hambrecht, who's a West Coast billionaire. His venture fund, WRH Ventures, through someone that I know over there as a managing director, they invest in that company, and also when I was talking to them, there was a potential liquidity event coming up with them going public. They were looking at doing that back in November, then we're going to do it around January around CES, but then ended up doing it in September. In terms of the process, there's a number of different ways in terms of finding investment opportunities. It could be friends, it could that bring them to me, it could be actively going out and seeking companies that have received investment from other people or other companies. It could be from different environments where people are pitching and it seems interesting. There are a number of things I look at, a bunch that overlap with which you guys look at it as well. Primarily the people, right? The team, but I'll maybe add some context because every time I think about it, there's more meaning to what that means. One example is the people who are involved is their industry expertise. Another is Have they built or led a team or teams, and what size? Another would be the mindset and the skill sets of the people on the team. For example, there's different types of problem solving, each that have their own weight, but is there someone on the team who is a good problem solver when it comes to either growth, so either on the marketing side or on the sales side, or in another way of thinking about it is on a monetizing side. That's one way. Have they monetized things in their past? Have they partnered with people who know how to monetize things? That's one way of looking at it. Some barriers to entry for other companies and some unique advantages and differentiators, unfair advantages. IP, does IP exist? Do they have ability, or are they put into an ecosystem of relationships that allows them to grow a little bit faster? Other things, is the person a good person? That's a criteria for me. Is it someone, I would like to have a long-term relationship with them, so is it someone that communicates well and that I can reach out to and ask questions or offer something to, and I'll get feedback back. So I think a relatability with the person or the people themselves. Another thing in terms of when I'm looking at opportunities is, does the person put a respect and appreciation and importance on the trust and money and support and time that investors in the supporting community are offering? There are a lot of folks who will take money, and that's pretty much where it ends, right? But then the folks that I like and seem to have been progressing well are the ones where they really value the investor's dollar or the supporter's dollar. I was watching an interview. We were talking about it was Warren Buffett and Bill Gates talking about success, and Warren Buffett said, if it was my money, I wouldn't necessarily feel as bad, but it would absolutely kill him to lose other people's money, and those are the types of things, as well as what commitment has there been already? Have they put in money? How much? How long have they been at it? Are they problem solving and figuring things out? How are the communication skills lined up? And then once you take a lot of those things, then it's partially a gut feel in terms of, is this a good decision? Does it make sense to move forward? Does it not? And those are some of my criteria in the process.
Great. Thank you. Appreciate that. Coming back this way, Ryan, share a little bit of the criteria for TVP and what kind of things are on your checklist.
Yeah. So I kind of give my general approach, and then we can dive into the details. But it's probably three things and maybe one intangible. The first being just market opportunity, and being able to understand and quite frankly articulate what your market opportunity is. And we'd all love to have the multi-billion-dollar market opportunity that's growing at double digits, but the reality is you don't need that to have a bona fide investment or opportunity or company. You just need to understand what that market is, who are those key customers, where's the void that you want to expose, where's the lack of innovation that you think you can kind of reinvigorate, and really just having that kind of cohesive market sense from the onset. The second piece, and I probably touched on it already, is just some level of market adoption or market validation. And again, I don't have rigidity that you have to have a certain number of customers or revenues or what have you. But you tell me what that market validation is. Is it referenceable customers that'll engage and be able to connect the dots of hey, here's this company and here's how this technology or product gets deployed in the real world, and from an investment perspective, being able to kind of go full circle there. Maybe it's a deeper strategic relationship or co-development agreement that indicates some level of kind of market adoption. And the third, obviously, being revenues. And again, it's not, it's got to be 2 million or 3 million or 10 million. Just what are your revenues? Who are they coming from? Why is it relevant? Those are probably the three general things. And the third, and again, it's probably more intangible, and it touches on some of the people factors and trust, but just bringing enthusiasm, to the process, especially at the early stages. I mean, enthusiasm, excitement, that's infectious. So when you're trying to get to know somebody and really engage and try to understand their business, because as a venture capitalist, I'm not really an expert in anything, so it's really has to be a dual conversation to understand where we're trying to head. But, bringing that enthusiasm and excitement goes a long way to, propelling that discussion going forward as you inevitably get into the details.
All right, great. I should have mentioned that this is intended to be a two-way conversation, kind of painting the picture of where these guys have come from, how they look at things, and then we'll go to some questions. I got one over here. So let me just touch base, unless you need it right now? Okay, so let me just hear from Paul and his shop, and then we'll get into the question and answer part. So Paul, tell us a little bit about the investment criteria for Encore One, how you go about looking at things, what are the most important items, et cetera.
Sure. I think people absolutely is most important. Is this somebody we want to work with? Our time horizon in particular isn't 3 or 5 or 7 years, it's decades. So I'm thinking about, somebody I need to see 4 times a year, potentially forever, and we need to be able to work together. So that's a little bit unique to our circumstances, private equity investors. So it is a real partnership with the seller, with the management, et cetera, for example. And of course, is it somebody I want to have a beer with and can trust and those kind of things. And of course, that'll be verified, through and through in due diligence. Size is important. So we look at companies that are $4 to $10 million in EBITDA. And that's really a reflection of, hopefully, the depth of the people, again, back to the people and the management team, as well as a reflection of our resources and the amount of dollars we want to put to work in writing an equity check, and as well as the team that we've assembled. Essentially, I'm the first line of defense, and there's one other guy. That's the investment committee. We certainly use reason and judgment, and we bring in, say, family members who aren't professional managers in our case of our family business, are sort of outsiders. They're beneficiaries, but they're not managers, and we're cognizant of their reputation and needs and things like that, potentially to be involved. But really, there's 2 of us, so I have to be pretty thoughtful about use of time and resources. And we're not looking to do 5 deals a year because I need to get this money out the door to return capital to LPs in 5 years, and I want to skip this next business cycle. We're looking to really do one really good deal a year where we've built a lot of trust, and we know both parties, I guess, the seller and the buyer, know that they're in it for the long haul. So, so size isn't just about putting dollars to work. It's a kind of an opportunity cost reflection as well. Beyond that, we're pretty industry agnostic as well. I mentioned business service companies. That's easy for us to wrap our heads around and think about as a 20-year investment, that it's not necessarily going to be disrupted by one of these guys' technology, or we're going to get Amazoned out, or it's otherwise going to be outsourced to China. So some of the companies I mentioned, of course, industrial cleaning and kitchen equipment. Presumably it's stuff, just-in-time services, that kind of thing that will be there for a long time to come, at least for the foreseeable future. And those are really primary. Beyond that, certainly making sure we understand the business, and certainly the management team understands the business. I guess, yet again, back to the people, understanding any gaps in the management team. Generally we can replace a CFO, but oftentimes the problem is that the seller is the number 1 salesperson, president, maybe chief operating officer as well. And that's kind of the biggest risk and gap potentially. So, has that business owner seller already identified their number 2, so to speak, somebody that's going to run the business going forward and carry that legacy and protect our investment? There's others, HR, finance, that kind of thing that we can kind of fill in gaps potentially and provide some support on. But, we're looking for the good operator that can, run the business in the meantime, and hopefully is motivated by growth, gets the benefit of our long-term investment, and understands that it's a benefit for them, that we're not taking over their life, that in fact it's an opportunity. Maybe the business owner that they've been working under their tutelage for some period of time, and they've really enjoyed, has kind of reached the end of their risk tolerance profile. They're 70 years old, they want to retire. This, president manager's got a lot of great ideas how to grow a business, and sees us as a ticket to do that, a provider of long-term stable growth capital, and potentially there's a good partner there. So think size, strong emphasis on people for sure.
All right, great, thank you. So if we shift gears to kind of Q&A, I have some more questions that I will go kind of horizontally to the panel, but we have one over here, Mike.
Rick's going to open Pandora's box. In order to generate some audience participation, I'm going to ask a question on behalf of the entrepreneurs in the room. You guys are very articulate in describing what your criteria are. Could you kind of let the entrepreneurs in the room know how much deal flow you got to go through in terms of throwing things over your shoulder in order to find those nuggets that you're willing to invest in? I know you're looking at more than one a month or one a year in order to be able to do what you're doing.
I don't have a number, but I try to look as many as possible. I don't have a number, but it's a lot, and it's part of it's a numbers game as well, because what may not be a fit for one relationship may be a fit for the relationship right next door, and so a lot of it is that just trying to find the fit or get that feedback and those types of things. Let's see, for me,
If you see one that fits for somebody else, do you move that forward to another?
Yeah, I try to be as helpful as you mean to connect it to that person?
Yeah, maybe
Yeah,
somebody
absolutely.
that wants to be in a space that you're not at all interested in.
Yeah, I try to make connections as much as possible, and I've done that a handful of times already. But I've looked at, so one of my strategies was I looked at different groups, that portfolio companies, whether it was a Coastal Ventures or Mark Cuban companies or whatever else, and I reached out to all of them. So that right there is hundreds of companies that I tried to establish some contact with. And so, yeah, at least hundreds of companies that I'm reaching out to boil it down to just maybe, a handful.
And I know that Anish does help because he and I have sent a bunch of things back and forth. So I know he is trying to help. How about you guys? How many numbers do you look at to find one?
Yeah, it's tough to quantify, because a lot of our deal flow comes from our kind of internal network of limited partners and resources. So it's not necessarily a numbers game for us. We don't. Our strategy is not really to make a lot of small investments in a lot of companies and kind of hope for the best. We invest in builds. We're pretty focused in that regard. But it's kind of our internal resources that bring stuff to us. It's folks like Rick that are really at the front end of a lot of different companies that can then expose. They can get exposed to us as the next level of capital. So I don't know if I look at 20 deals a month or 100 deals a month. It just kind of depends. And from our perspective, it's not necessarily the churn of it. It's can we meet entrepreneurs or get introduced maybe when they're not raising money. Because I'll spend as much time as possible just getting to know that individual, getting to know the company, really doing the diligence along the way versus having that pressure of, hey, we're trying to get a $3 million financing done or $10 million financing done in the next 60 days. That's a different dynamic. So a lot of it's just kind of matching timing with capital and just having the stars line in that regard, which isn't a great answer for an entrepreneur trying to get a financing done, but a lot of things have to come together at the right
But
time.
it is a reality.
I actually
That's
think
what we're
that's
trying
an
to do.
important point, and Adam and I have talked about that, and I talked to a lot of people about that, making that relationship before you need the money to help them, the investors, have the opportunity to learn about your business, kind of digest it. You develop a relationship. You heard a lot about trust, develop some trust, and then eventually talk about raising capital. So I think that was a very good point. Thanks for sharing that, Ryan.
Yeah.
Numbers-wise, Paul, how many do you think you folks look at
The
to find
traditional
one?
private equity fund world loves to tell you we look at 500 proprietary deals a year, and we do 5 kind of thing. So anyway, we're a party of 2. We don't have teams of 25-year-old associates that are combing books of investment, that investment bankers flip them necessarily. We look at those books, and we like talking to investment bankers, and a lot of them get us. So if they're representing their clients well, they know we can avoid this broad auction process maybe, and here's this long-term investor where you might be a good fit with potentially. I like those types of conversations, but otherwise talking to all the other sort of centers of influence, the accountants, the attorneys, other resources in order to get those warm introductions and just those meetings to meet somebody early on in the early stages of their excuse me, succession planning or exit planning, whatever that might be, just, you know, to get out ahead of the conversation, maybe even provide some coaching, things they might want to do to kind of improve the look and profile of their company to make them more, you know, make a deal more doable in the future when they are ready to exit or realize some sort of liquidity event. So, but I've been at this, you know, as a novice for 8 months as of the turn of the calendar today. And, you know, we've got 100 deals and 24 that we're still monitoring, 100 that we said no to, I should say, you know, 24 that we're still monitoring, and, you know, one that's in sort of an advanced stage right now, with no website and just by doing stuff like this and a lot of handshaking and old-fashioned networking. So imagine if I had a real marketing staff, you know, we could really get out there and you know, get some deal flow. But it's out there, to your point. It could be 20, it could be 100 in a
You're
month.
still going to work every day, right, Paul? You haven't given up yet after that long 8 months?
No, it's been a lot of fun. It's been a whirlwind. So
I was just gonna
ask me in 5 years, I guess.
I was just gonna add something, looking at it from the other side of the table, in terms of how you can maybe make your outreaches more efficient if you're looking to build relationships with folks that could be possible avenues of offering investment. Is, I think, you know, you hear a lot of people talk about, you know, there's some folks who won't look at anything unless it's been referred to them, or it's someone that they know, or it's a relationship that already exists. And so one way is, if, you know, is asking people that you know for recommendations, or connecting to people versus just reaching out cold to places where you reaching out cold to, you know, to buckets of money, right? I think that holds a lot of weight in terms of how the transference and the weight of that relationship and the credibility and the trust of that person, which then can make it a little bit easier to then start talking about what you're doing.
Certainly in the Twin Cities market, that is very true. Ron and I can probably tell you a whole bunch of stories about clients that we have that have needed money, and we know the people to connect them with, and that credibility that a good referral can give will blow the other 100 out of the water, because you'll be more confident moving forward with it. And if this was a quantitative process where you could do 1 out of 100, what you guys do would be pretty easy, because all you got to do is then do 500 deals and get them done. But it doesn't work that way.
It doesn't.
So, speaking of reaching out and making connections and so forth, there's only one opportunity to make that first impression. So whether that first impression is at an event like this, or that first impression is in your office or at a coffee shop or whatever, what comes out of an entrepreneur's mouth early in that initial conversation that either might kind of hook you or turn you off?
You start with me. Let's say, I think a lot of the things relate to what your gut feeling of that person is. But, you know, some people are turned off by arrogance, right? So if you're coming across it in that way, it may not be the best. In terms of, I think listening skills are super important in any type of communication, right? So if you can kind of understand, that shows a communication skill that is not just relevant for that conversation, but relevant for how you communicate with everyone in life. And I think that's something that people take away from that conversation. The enthusiasm, how excited are you about what you're doing? I think those are some things. Any type of successes that you've had are important, but I think people, when they hear those successes, some people will ask if they're really successes. So someone will say, oh yeah, I'm growing like crazy. And then you ask them what that means, or you ask for some numbers, or you ask for some customers. And then to you, they're not really growing like crazy. I think those are certain types of things. And I would not be afraid to ask for feedback in terms of how you present yourself. Because I think just in life in general, you look at our education system, but you look at a lot of things. Feedback on your character and on your communication is something that is not really readily given for someone to develop, which can really impact how successful they'll be this being one example of whether it be raising money or growing your company or making an impact or whatever it might be.
Great, thank you. Brian, Paul?
Go ahead.
Yeah, I mean, what draws me in is probably that elevator pitch that's concise, right? I mean, so, hey, here's my company, here's the market opportunity, here's why we think we're going to be successful, and here's what I'm trying to get done with respect to capital and growing the business. And sometimes, and every conversation is different, but just having that kind of 1, 2, 3 punch on the front end can be very, very productive to draw you in. And it's not necessarily a negative, but I tend to be a little more cautious when you kind of say, okay, well, what type of financing are you pursuing, or what the amount, or what are the deliverables? And sometimes entrepreneurs don't know, or maybe haven't thought about that. So I mean, I think it's probably important, at least from my perspective, on that front end discussion, for that entrepreneur executive to have a perspective on, hey, I want to get this financing done. This is the mix of investors that I want to get involved with the company. I'm also thinking about maybe that next financing or that capital requirement that inevitably comes up in a company when you don't expect it, to kind of have that holistic view on what I'm trying to get done on capital formation as well as growing this business.
Good, thank you. Paul?
Yeah, similarly, and I was looking at, Rick was so kind to share some notes with us in advance, and I was thinking about some of these answers, and glad to hear Anish and Ryan share a similar comment. But there's something to being likable and sort of lacking arrogance, I guess, if you will, and to the extent there's enthusiasm and they know their numbers and they want to share, and then conversely, I guess I appreciate as a potential investor willingness to hear our story, because again, it's as a private equity investor, and a lot of private equity investors, whether they are a traditional fund, they have different sort of investment profiles. They're seeking, I think, a willingness to kind of hear us out and learn a little bit. So whether you're raising capital for the first time or selling your business once in a lifetime, you don't have all the answers, and we might be able to impart some wisdom. So I guess the openness of communication, the potential to for a two-way street is would be something we'd look for.
Great, thank you. Again, raise your hand if you want to chime in here. Oh, hey, Angie.
Okay, so I'm in the medical device community, and I'm curious, as Minnesota has such a huge potential and rich resources here, my question are any of you interested in the medical device community investments, and if not, why not? And then the second part would be the culture. And my investor comes from Texas and invested in a Midwest, only invests in Midwest, their fund, because of the value that we present. And so my question for you is I hear Anish saying that you follow Mark Cuban or different, and not necessarily, but do either of you look at Midwest opportunities and Minnesota grown or medical device?
Okay, so just for the sake of anybody who didn't hear Angie, also for the folks videoing the event, which, by the way, this will be up on the website in like a week, maybe 2.
Okay.
So if you want to hear the answers or whatever, likewise, there's also a number of these up online that you can look at past ones. But Angie's question was, does anybody invest in healthcare, life sciences? And then do you look at the Midwest differently than you might look at other markets? Did I miss any of that?
That's it.
That was the summary.
Good summary.
I could start from our perspective. I guess maybe a Midwest bias ourselves. We tend to avoid the coasts, thinking that the competition and the pricing might be too frothy and a little too overheated. Also, from a competitive standpoint, I think to the extent our message resonates either in local markets where Opus, so our sister company, is located, and we can sort of leverage the name of the family and their philanthropic approach to their community. We like those opportunities. But as far as medical device, and I'm thinking, depending on what sort of class of medical device you're talking about, there could be different regulatory prohibitions that make it challenging for us. It's another regulated industry where they're looking through not only the management of that company, but up through the ownership, maybe all the way to the beneficiary level. How much do we want to expose ourselves? I imagine a traditional private equity fund, general partners might take the same view. Do they want to be regulated by Medicare and Medicaid and other sort of third-party medical and healthcare related laws and regulatory bodies? That kind of thing could be a limitation. So that's sort of one of those special niche industries. I would think a specialized investor, you'd want to look for a special investor to get involved in those kind of things, to know what they're getting into, because there's a lot of added layers of due diligence otherwise.
Yep. Ryan, Anish?
As far as geography, not a preference. I mean, we stay away from the West Coast, but obviously we're focused on doing investments here in the Minneapolis market because of the points you bring up. I mean, there's a tremendous community of high quality companies, across a variety of industries here. So investment should be supporting those companies here locally, in addition to the East Coast. Now, as far as specific medical device investing, I mean, it's not our primary focus. But we're interested in those markets. The reality is I've watched from afar during my career, the cycle of medical device investing, not only here but kind of nationally, and all those things that come up in a company with respect to trial activities, setbacks, regulatory requirements, reimbursement, all those things that you need to have a successful outcome. So it's really a matter for us, if we're going to invest in a medical device, to understand the holistic capital requirement of the company, and to make sure that TVP, in addition to whoever else is around the table, be it financial or strategic, has the ability to support that company, to a point of success. Because it's no small endeavor, as you very well know, jumping through all those hurdles, to get to, that premium exit that you're looking for.
There's a bunch to talk about on that, but I'll try down in terms of the landscape, the mindset, and then maybe how I view it directly. So in terms of landscape, the VC side, and a lot of less dollars going towards early stage medical device companies. It's just kind of happening. One of the things that a lot of you guys know, Norm Dan, he used to be an SVP over at Medtronic. His big advocate within today's market of medical device space is, if you're going to get money, go after getting money from a strategic. So that's one on that side. That is the medical, a little bit about the medical device. It also depends on, regulatory pathway, right? What your goals are? Are you just trying to get approval, or are you trying to commercialize it? At what point, what's your strategy, and how does that relate to what you're doing? Medical device, there's kind of offshoots. People kind of bundle things in medical device as well. So it's not just the device, people are investing in, in software related to the medical device industry. Those types of things. In terms of Minnesota, so investments geographically and culturally, I think it kind of depends who you relate with. A lot of Minnesotans get along super well with other Minnesotans, right? And so that's one consideration. And it also, for medical device, it may depend on what pocket of the country you're in. So you have different types of products in your, California versus a Boston versus a Minnesota versus, your different European markets, and what pathway you go in terms of going to the EU or if you go through the FDA. So different things to consider. It is a longer, it can be a longer road these days, just with the timeline and the money. In terms of culture, I think it just depends on the people you relate to, the things that stick with you. Is there something more specific to the medical device that you're trying to kind of get an idea of?
We're class one, but I just see, take Minnesota's strengths. We have an incredible community here, incredible institutions with Mayo and the university, and there's a lot of opportunity. So I was just curious as to why. Our regulatory path is easy, but not that. I think you answered my question.
I'd also get maybe a little bit of a mix of people's stories who've had successes in a more recent time frame. A lot of the successes in Minnesota in the medical device industry were from a little bit of a different time. you know, the Medtronics, the St. Jude's, your Manny's, your Norms, the way they built businesses and the environment that existed for them to be able to do what they did. It's very different. You wouldn't be able to do a lot of those same things that you did then, now, in today's environment. So I'd maybe try to capture some stories from people on what paths did they take, how did they troubleshoot. I mean, before it used to be a lot of regulatory, now it's a little bit more focused on reimbursement. So just kind of think about the information that you're getting from the community that exists, what community that is. Also, if you look at money in Minnesota, even of the big guys, a lot of that money is moving outside of Minnesota. So St. Jude, Abbott, Medtronic, you know, Ireland, Covidian. And so just different considerations in terms of how you piece that puzzle together.
Thank you.
For those who don't know, Anish, Manny and Norm, Manny Villafana, who's reasonably approachable, and Norm Dan, who's very approachable. And Norm wants to keep his feet in the game, and so he's still out there doing stuff, and both those guys probably would be interested in talking to you, Angie, or anybody else in the audience. So have you next, but in the back.
So it's a two-parter in case you don't want to answer the first one. Thoughts on initial coin offerings with regard to blockchain and cryptocurrency technology, if that's something you're involved with. And if you don't want to answer that, wave the magic wand, and what are some industries that you might want to involve yourself with if you had it your way, like say drone services, for instance, not being hyper-specific for any reason, but yeah.
All right, so if you didn't hear, basically it's asking towards specific technology categories, whether they were interested in it, as well as maybe any high-level overviews. A plug for tomorrow lunch, if you don't have tomorrow lunch plan, is I have another venture investor speaking, actually talking about AR, VR, artificial intelligence, and robotics. That's back here at the club at lunchtime tomorrow. But anyway, as it relates to the categories he mentioned, any interest on your part or any commentary at a high level?
You want to go first this time?
I'm thinking
Pass.
I can go.
Go ahead.
In terms of those industry specific, I don't know enough about how they're trending right now, but again, I'm kind of, you know, the different philosophies. Rising tide lifts all boats. So that's one philosophy of getting into an industry that's emerging. It's also related to timing, right? Which can impact the growth or the success or the return. And those are a lot of hot spaces. So for me, if there's an opportunity in those spaces and everything made sense, then yeah, for sure, I'm industry agnostic. The other side potentially is there are problem solvers in non-sexy, non-trending industries. And so I'm very open to those as well. You know, manufacturing, you know, let's say you put that in a stereotypical bucket. They're just people who know how to get results regardless of what environment they're in. I mean, they're selective of their specific environment. But yeah, I think the other thing that I would maybe say is related to those, since they're trending, sometimes it's tough to discern, because if your information source about those industries is, let's say, you know, news channels, then it can be very I think there are a couple additional levels of analysis to dive into the opportunities. And then sometimes when you hear something is really trending, you may have missed the boat a little bit. And so it kind of depends, but more specifically to me, open to all of those different spaces. It more so depends on the people, the opportunity, what's going on.
Ryan?
Yeah, I'll breeze over the ICO blockchain stuff. I mean, it's just not what we do, right? So I mean, it's interesting. You know, I'm not terribly adept on it. You know, for our style of investing, I mean, it's not just access to capital and write a check. You know, I mean, it is that partnership, and you need everybody kind of in the boat together working to be successful. So it's just not something that we're focused on. You know, as far as industries, you know, everything technology is kind of how I approach it. So I don't have any limitations in that regard. You know, I mean, there's a lot of buzz around artificial intelligence and machine learning and all that stuff, but you know, I think you have to be fairly discerning in how you define yourself in those broad themes. You know, I mean, AI's been around since the 90s in the financial markets and the financial world. So, you know, being able to, not kind of define your opportunity around the buzzword, but say, hey, it's in and around machine learning because, we've found an ability to really extract data in this way to turn unusable data into revenue generating data, or, something like that. It's taking it to that next level of, how do you define your opportunity, your market versus, hey, I'm the next, virtual reality, be all end all. It doesn't resonate. But be specific and get away from the buzzwords and kind of those high level kind of market definitions, I guess.
And if we take those last two questions, I think the common theme was if you're reaching out to an investor, you want to reach out to one that is spot on with what you're doing. Does you no good. It's not a valuable use of your time, and it's not efficient for the investors to call somebody up and you're pitching one thing and that's not their world. So I had a question over there which I'll work to, but Bob.
You guys represent three levels of investments so quickly. Looking at the range of ROI you're expecting, the percentage of the company you like to see out of that in range, and then your harvest horizon.
Theirs is going to be a lot more specific than mine. So my criteria doesn't. It varies depending on the opportunity, right? But so it's a much smaller percentage to get in, but there's some type of liquidity event like this IPO of the electric vehicle company that I was talking about. It's still a decent return, right? So I'm not really as and also from the angel side, as there's more growth and more successes, then it kind of relates to a dollar amount equating to a smaller percentage potentially, right? But if there's growth, that means that smaller percentage could equate to a piece of a larger pie. So yeah, I don't have they're going to have much better metrics in terms of, harvest periods, I guess in general is a lot of folks want to, well, you got evergreen funds and folks that shoot for decades, but that's different for PE because you're cash flowing. Yeah, man, I'd like to do it in less than 40 years, right? I'd like to be more immediate. 3 to 5 years. But you don't. There's an openness to what that time frame is because things change. So many stories of people who've, had something happen within, a couple months, and then folks that took them 12 years or it took them 25 years.
So you get in for pre-revenue, is what you're saying
It's a
on
mix.
those?
For me, it's a mix of pre-revenue and revenue. But they're probably going to be able to answer your question better.
Ryan,
because of the metrics.
return expectations, timeline, ROI goals.
Yeah. So generally 4 to 6 years from dollar one, and that includes supporting follow-on investments and things like that. Target ROI, you can look at it from a company perspective or a fund perspective. It's kind of that 30% to 40% range. So if you kind of map 4 to 6 years with a 3% IRR, you can kind of get to that multiples of capital that we're looking for. But to Anish's point, there's no one size fits all. You have to operate as an independent, growing company until the market tells you otherwise, and you might be ready for a strategic acquisition. That's kind of where we specialize. So I like to say, hey, we want to harvest in 5 years, but we've been involved with companies for 15 years, and we've been involved with companies for 2 or 3. So it's a framework, but it's malleable, and you shouldn't.
That's all I was looking for, just to kind of
Sure.
parameters.
Paul, what about
Yeah,
you?
similarly, it's probably,
You already kind of told us.
what's that?
7 to 10 EBITDA, but you didn't tell your horizon of things.
Well, yeah, so 4 to 10 in EBITDA would be the size of the company, but, we're modeling it as if we're going to exit it, say, in, 5 to 7 years, and targeting kind of a 20% IRR, although we don't really intend to ever exit any of the businesses. So it's strictly sort of an unrealized gain, kind of modeled on paper, but, 20% with a long-term horizon.
Okay.
Thank you.
And you also asked about control. We'd be looking for whole ownership. And likely majority control for sure, but at least the path to whole ownership.
Okay. All right.
Yeah, I probably should answer that too. So, not control per se, but a major investor. So kind of 20 to 30% ownership in a broad stroke over a series of financings. Board, a seat at the board, maybe 2 board seats depending on the mix of investors, but some level of governance and participation in the governance of the company for sure.
In the back.
Thanks. Hi, Gail. I'm Stacy. So I don't think this question applies to all of you. So I don't feel any obligation to answer if it doesn't apply. Paul, I don't think it applies to you or
I got the nuance.
yeah, you're a special case, and that's fantastic. So I'm just curious, the aptitude for this panel to support a for-profit but mission-based fashion concept that will help lift people out of poverty. If there's no appetite for this, do you have anyone that you would recommend? Because I have a concept that is intended to lift people out of poverty, that is mission-based but for-profit.
Sure, so.
And, Paul, I am a good person.
Bombas socks.
So again, just so the video picks up, basically it's what's the appetite up here on the board for mission-based investing, otherwise known as double bottom line or maybe triple bottom line. There's some nuances there, but it's for-profit, but it's mission-based. Anyway, any interest here? If there's not interest, any ideas or suggestions for Stacy?
I love talking to everybody. So yeah, I have that's not nearly enough information, right? For me, I just have a ton of questions. And I'm sure there's probably someone that I know that I could connect you to that could be helpful in some form or fashion.
I have a ton of answers, so
Yeah,
that's fantastic.
Likewise, I love meeting companies, entrepreneurs, executives that are excited about their companies, so, it'd be worth a conversation. Again, for-profit with a mission, that's not inhibiting from my perspective. I think what's important is to really carry that forward into, okay, well, this is an investment and an opportunity. An investor's looking to make that investment, but also get liquid at some point. So how do you connect for-profit, mission, liquidity, and as long as you have that profile, it's a bona fide opportunity. And
Would it be a Sophia fit?
Potentially as a woman, the Sophia Fund is a fund focused on women-run ventures. So that's one angle as the woman-run ventures. But there's actually a fair amount of stuff out in the universe for double bottom line, triple bottom line investors. They actually have conferences that's all about those people. Typically, I don't want to putting words in these folks' mouth, but they're going to be a little bit more single bottom line, profit-oriented endeavors. Doesn't mean that they wouldn't be interested. And then I don't know if you know the woman who runs Finnegan's here in town.
My last name's Finnegan.
Really? Yeah. So it's Jacqueline, I can't think of her last name, but she really beats the drum hard for kind of double bottom line, mission-driven businesses here locally. Sure, she'd love to hear from you. I believe it's Jacqueline, whoever.
I have high degree of confidence.
Okay, all right. Okay, we had, you got it.
I got her name.
Adam has it.
Yep.
Okay. Let's see, question there, and then we'll come to you next, sir.
Okay, so as a student entrepreneur, I was wondering what's the best way, your advice of just starting a relationship?
Starting a relationship with an investor. Okay, all right.
Just getting started is your best advice.
So let me throw one answer at you because I think it's a good one, and then let them chime in, which is, I think you want to seek people who are going to be interested in your product and come at them with something that you can share that would be valuable to them. Hey, you just went to a conference and you heard all the stuff that's relevant to one of Ryan's portfolio companies. So when you reach out to him, it's not just, hey, what can I get from you? It's what can you bring to their universe. So if you have something of value that's relevant to one of his portfolio companies, I think that helps create a kind of mutual respect or mutual value. So that would be my answer. But again, the question is, how early, how do you go about developing a relationship with an investor?
There are a bunch of different ways to meet people. When I was in school, there was an entrepreneurship club. I'd go, a bunch of executives, CEOs, different folks, different backgrounds. They present, I'd grab business cards, and I'd just reach out just to learn. You got LinkedIn, so LinkedIn is a great way just to reach out. Any way that you can get a referral just to people that you already know. You know any folks who you could introduce me to, just want to grab some information, maybe grab some coffee. Those types of things are great. And I think another approach would actually be to connect on things that are not related to business, right? So if you guys went to the same school, if you play the same sports, if you volunteer in the same space, because then you share some common interest, and then it's not just a straight business conversation, but that can help build a long-standing relationship in that sense. But I mean, there are a number of folks. There are a bunch of folks here who would be open to meeting. I hope there are a bunch of folks here that would be open to meeting and sharing stories and hearing what you're up to. I mean, there's just so many outlets through your school outside. If you're on a, go volunteer. Actually, go sit on a board. If you sit on a board for something that you believe in or you want to be a part of, there are a lot of great folks that share support of that cause, but are also very successful in their own right, that will probably, willing to connect you to folks. So there's just a number of different ways to meet people that can get you to an investor, directly by talking to an investor or by asking people you know to connect you to an investor.
Ryan, Paul?
I think it got covered. I mean, I'll just speak from my own kind of career and professional development. It's that willingness to reach out and come to these types of events and follow up. I mean, I think that I found, maybe I'm from here and went to the University of Minnesota and have been in this market for some time, that people do want to engage. And I agree with Rick, if there's some kind of symbiotic kind of topic that kind of brings together, that's good. But ultimately, kind of having no fear in that discussion and reaching out, introducing yourself, I think you'll find people are receptive to having those coffees and dialogues, because every discussion you learn something, whether it's with an executive, an entrepreneur, a student entrepreneur, or what have you, and just kind of being in that flow, kind of generally speaking.
Yeah, I guess I would second that. Certainly volunteer opportunities are helpful just to meet folks, and otherwise, if you're looking for a summer internship, I got 20,000 letters that need to go out, and follow-up emails and phone calls and things like that. You can really roll up your sleeves and get your hands dirty, and we'll pay $15 an hour. But yeah, I think make yourself available and present, and come to these kind of events, and just soak it all in and find your way into either the investing community or within those businesses where they're seeking investment. I'm sure within incubators, for example, they might be looking for resources and help, and as a student, if you're just looking for experience, I'm sure those kind of companies would welcome the chance to get some local college labor and support.
I wanted to add one thing just really quickly is sometimes there's a saying of the fortunes and the follow-up. So I think a lot of times, maybe in school or wherever else, people reach out, they don't hear something back, and then they kind of move on. So one, just in terms of how you reach out to these folks, is if you reach out to them and you don't hear back, just reach out again in a little bit of time. You don't hear back, reach out again in a little bit of time. And then maybe timing, maybe busy, maybe whatever it will be, but just a level of persistence and follow-up, I think, will be a good just habit in terms of meeting up with these folks or sharing stories.
Great point. Thank you.
Yeah, unfortunately, you have a luncheon about it tomorrow. Unfortunately, I'll be back in Texas by tomorrow, so unfortunately I can't be here.
Well, that'll be videoed too, so you can watch that online.
We can stream it to them live over Facebook.
Well, maybe next time.
I'll be back in Texas by then. I am involved in artificial intelligence, and kind of answer something that she just asked. Investors, I kind of look for somebody who seems to have some of the same interests of what we're involved in, and basically with their structure kind of matches what we're looking at. And does the person hit all the right notes with me? Ryan, this question is directed at you, because you actually hit all the right notes with me where we are. With the artificial intelligence, since you're into technology, where do you think it's going, and what types of investments would you make artificial intelligence at this point? Because we're actually doing one that's a behavioral based, not a data based. So that's one that we've been looking at and talking to investors about it. And since you've already said technology and some of the structure you're talking about is similar to what we were looking for, to me, you're kind of an obvious one.
Yeah. And I think you bifurcated it appropriately. I mean, the data-oriented AI is much more tangible, I guess, from an investment perspective on the front end, right? Because you can identify that basic enterprise application that, you know, the Amazons and the IBMs and Microsofts are leveraging their data to do something.
Mhm.
The behavioral stuff's a little more art for us right now, but, you know, we're getting smarter at it. I think the way that we look at it, we look at it both technology, opportunity, and time, right? So, I mean, we were a vintage 2000, our first fund was a vintage 2001 fund, so we survived those great big opportunities that didn't materialize. So we carry forward that same mentality in AI and machine learning to make sure the types of investments that we make have a legitimate opportunity to grow, develop, get adopted, and then get monetized. And the challenge with behavioral is not that can't happen, but it's in what time frame is that going to happen, and who are going to be the winners and losers. So we're probably that much more discerning in that regard to really understand, you know, all those different components of your company or your opportunity and how that fits with a typical investment from a venture fund. So does that answer your question?
Yeah, because we think we're on the right track, because the University of North Dakota is already working on a project with us, and the Mayo Clinic today kind of wanted us to move forward with them also. So that was, and now it's the point now where the idea is being accepted, so now it's the point. A couple months ago, we really didn't have anybody on board, because we were explaining, right, now that we narrowed the focus, we're getting more and more people say, yes, we like this idea, let's move forward, let's at least get you involved with the people. So when you're talking about technology, being right down your alley, you said, and you were talking about, what kind of investments or should we looking for, you are actually speaking right to the criteria that we had drawn up in our executive summary.
Right, and I'm sure Ryan would love to take your card and follow up, but that's getting a little into the weeds. Yes, over here.
Just to answer to his, what he's looking for is a hybrid, and you might look at latent semantic indexing and create what's called exemplar sets, which pulls the behavior into database, which helps cross that chasm. But my question is, you guys talked about the team, putting that all together, and you've done really well at figuring out what you're buying, but how do you work with who you're buying? You guys brought up the trust factor. Are you using any tools, assessments, things to try and get right? Because you see some of these businesses that fail because they don't have the right guys in the right seats on the bus, or they don't know, or their fiduciary integrity is very low, and you didn't know that because they were good at pitching. So are you guys using any tools or anything to try and?
So again, for over this side in the video, no, that's okay. For people over here in the video, are there any assessment tools that you all are using? What kind of due diligence do you go into to try to best understand the team before you get involved? You were using EOS language over there, so is there a operating system, whether it's EOS or Gazelles or something that you all use or steer people toward?
I could start, potentially, I guess, if we see a need for it, but a lot of it's just, gut and experience, and do we like working with these folks, and do they seem to know what they're talking about? We do background checks, if that counts. So there's a lot of that and sort of thing in due diligence. But no, not in particular. We're not, hiring psychologists or something like that to kind of identify, who needs to be on the bus and the right seats and those types of things. I'd also add, we're not trying to hit like a home run tomorrow. We've got a pretty long lead on this thing, and they don't have to be an agent of change and do a bunch of M&A in the next 3 years in order for us to get our return, or change a cross structure or a cost structure or a culture of a company in the meantime. So I think we've got some time, we're sort of afforded the time, given our investment time horizon, to sort of let those things marinate and kind of come about organically, potentially.
Yeah, for us, no tools. I mean, like Paul said, it's all interpersonal, face-to-face. We spend a lot of time on the team, not only in that relationship building, but understanding where the skill sets lie. Later stage investments like Paul's, they can absorb churn or turnover or what have you, but, in all the investments we've done, there's been certain circumstances where we need to pull on our network and our bench, to fill a C-level role for an unexpected situation, or and not necessarily replacements, right? But ultimately you can't lose time and lose energy and burn capital if you lose somebody in a key executive role. You got to understand how to kind of maneuver. So again, no tools. It's all interpersonal, but you got to know how deep your bench is and where your risk is.
No formal tools. I just keep track of. Always learning about how people think, how they behave, sometimes they might be doing something, but their interest and what they excel at may be something that's a little different. And so just thinking through that and taking notes, and then using that framework for understanding people in teams. So I might do checklists or notes or specific questions to better understand the person, but no formal tools really.
Thank you. All right, I'll come back to you next, but over here, Scott.
Quick question for each one of you guys, because I suspect it might be a little different for each of you. Ryan, you mentioned an initial pitch and a couple of things you wanted to hear. Can you guys just touch on the 3 to 5 things you gotta hear in an initial discussion with someone?
Pause. He's thinking. Yeah. Are you gonna go? We'll go this way.
Who we are, what market we're operating in, who are our key customers. What's the way to put this? What am I at, 3? Do I do 5?
No, 3 to 5.
3 to 5, you gotta check.
And market validation, customers, what have you, and also exit strategy. And I'll put a little emphasis on that. Not that it has to fit into a 3 or 5 year time frame before, but just having a perspective that if you're trying to corral investors, irrespective of the stage, that you're thinking cradle to grave. And it's going to move around, it's going to change. The capital you think you need today might be different than what you think 3 years from now. That's all okay, but you have that kind of end-to-end perspective that's going to resonate on the front end. Versus, I don't know, or hey, we're going to get so big, we're going to do an IPO. Well, that's just not realistic for 95% of the technology companies in the market today.
I don't think I really have 3 to 5 things because I think there are people who it's just not enough, right? I think it's more so how it's said, right? We were talking about the arrogance before, or if someone was just speaking 400 miles a minute, blasting out a bunch of information, it just doesn't feel good. It's you're not going to be as interested to learn more. So I think getting to the learn more phase. If it's in an environment where you're giving it, also the 3 to 5 things that you communicate is dependent on the environment, right? If you're doing a pitch and there's a certain ask, you want your ask to be one of those 3 to 5 things. But if you're just having a conversation, you're telling people what you're, someone what you're up to, said, hey, if you want to grab some coffee and talk about it more, these are the things I'm trying to figure out, then I at least would be open to, most likely if you seem like a person that I would want to sit down and talk to, right? And who wants to talk to me, that I'm most likely to sit down. So it's tough for me to. I think it's very dependent on the scenario, but it's more so a read on how it's said and who the person is, the character and how they hold themselves, versus just the specific points of what they say. But being concise, who you are, what you're doing, those types of things, who your customers potentially are, could be. All those things are helpful.
All right, Paul.
I guess I want to know the quality of your financial statements. Have you identified the next layer of management? Do you have a team around you, an accountant, attorney, other sort of advisories? And of course, I'm talking about a business seller. And have you thought about what you're going to do for the rest of your life? Vis-a-vis, you're not going to flake out, are you?
All right, I think we were in the back, and then Terry, I'll go to you next.
Hi. My question is, what is your experience in IP acquisition? At the time of acquisition, then is there a certain rule of thumb for afterwards and working with the people that you acquired the IP from? Or is that just really dependent on each situation?
Question was about IP and IP acquisition. Are you asking them about they make an investment in a company and that company's acquisition of IP? Was that
Yeah.
where you were going with that?
The company already exists.
Yep.
And they're looking at acquiring new intellectual
Yep.
property. So when they acquire it, then is it common for them to also contract for like the consultant services of the people who develop the IP, or is that just really dependent on each situation?
Yeah, let me work the verbiage around what I think I heard is,
Okay.
you're looking at making an investment. You have to kind of assess the IP, how might you do that? How important it is to you, and then maybe how much do you want to continue to have that be part of the scenario? Do you know, if they're pushing the gas pedal halfway down, do you say, hey, push it all the way down, or vice versa? So it's kind of on the assessment, you get involved, and then as it moves along, how do you play the cards of intellectual property?
I can answer since I'm not the best person to answer it, so my answer will be short, is that,
Kind of
Me
like
too.
what- I'm sorry, I didn't really clarify that.
well, no, it's, for me, I don't, the way I look at it is, since I'm not the industry expert, I kind of put more of a reliance on the industry expert, how they view the IP, and then probably get some second opinions
Okay.
on the value or potential value of the IP, and looking at it that way.
Well,
So that's
yeah,
why I'm not the
person-
best.
Person that originated the IP, do they want to still work with that person that they're purchasing the IP from?
In terms of-
really my direct question.
Well,
In terms of, I'll just give, that one I can answer a little bit, in terms of some answer, is that there's 100 different ways to structure a relationship and a negotiation, and how money moves, and those types of things. If you guys have specific experience, that might be more helpful for us.
Yeah, I mean, I don't have a ton of experience on direct IP acquisitions. I mean, we spend a ton of time and energy, you know, evaluating a company's IP, and we build that IP over time, both internally as well as from third-party acquisitions. You know, there's probably no formula that we follow, and there's probably no, at least in my experience, there hasn't been any ongoing relationship. I mean, if we need to acquire intellectual property for whatever reason, be it opportunistic or critical to what we're trying to do, you know, typically we would structure a deal that gives us control of that IP, so our moat is built, you know, versus an ongoing relationship between inventor and the company and the go-forward plan. Does that answer your question?
Yeah, I was just, yeah, that pretty much, in order, before it gets launched, they may need the knowledge of the person who developed the IP, is what I'm saying. So I just didn't know if there was any.
I don't wanna-
rule from.
Yeah, I don't want to put words in these guys' mouth, but if you're saying, hey, would they buy some IP, they're not in the business of going out and buying intellectual property. They want somebody with something in a perfect world, nice, neatly wrapped with a bow, and it fits in a box, and they can do their due diligence, and so the least amount of loose ends, the better from their perspective. And if intellectual property is a loose end, that's going to be a problem. And it's not as simple as like, hey, I got a chance to buy some really cool IP from the University of Minnesota. Do you want, you know, write a $10 million check to support that? That's a tough road to hoe. So think of trying to box it all up and wrapping it up in a pretty wrapping paper and a pretty bow. Okay, so we're getting close to 7:30. There were a couple of folks that had questions. I think that they'll stick around for a little bit yet, so feel free to come up and give your business cards to them, or get their feedback on whatever questions you have. I'm going to ask 2 questions, looking for very quick answers. Second one, I'll give you a chance to kind of wrap up with closing thoughts. But the first one is kind of about advice. Was there something that somebody told you at some point in time that really has stuck with you over the years? Something that you lean back on when you're trying to make a decision? Was there anybody who really gave you kind of a nugget that you've held on to as you've gone through and made, in some instances, very tough investment decisions?
I can start. Life's too short. You know, sometimes it's too short to do business with people you don't want to do business with, or, you know, that might have a kind of a sordid background, even though the opportunity in front of you today looks pretty exciting. I think you follow your gut on that one.
Yeah, probably two, don't run and check your body can't cash, and secondarily, aim high. You know, if you have an opportunity, shoot for the stars, paint the big picture and go after it.
I actually write down a lot of the stuff they hear, so whenever I look at them, the meaning of them kind of evolves. But two that just stick out for now is one, trust your gut. I think that can actually, or for me, you can actually learn how to trust your gut a little bit more. And then the second one is something we were talking about Norm before. He said, you can't write trust into an agreement. And so I think that sticks with me a bit also.
That's good. All right, so to summarize, if you were going to leave a nugget or two with the audience for them to take with themselves, and maybe it's one of those pieces of wisdom that you all have carried with yourself, what would you leave with the audience tonight?
I think one is, I think being curious is just helpful in a lot of different ways. So I think just as a general way of approaching situations, a curiosity is super helpful. And then I think I'd go back to some of that personal development. Maybe one that sticks out is, getting feedback on how to improve your listening skills, since I think that permeates into a lot of other avenues that can help you be successful. If I only had to pick two, we'll just do those two for now.
Yeah, I'll answer that in the context of kind of investor to entrepreneur and company. Don't shortchange yourself with respect to how you think about capital, right? And in a lot of ways, the amount of money that a company needs to be successful is kind of a solve for X from my perspective. So, if you need $500,000 or you need $1 million or you need $3 million, really have a good understanding and advocate for it. And don't be afraid to ask for more or to overcapitalize yourself versus, hey, I just want to raise a couple $100,000 or, some lesser amount of money that doesn't give you the staying power and wherewithal to really be successful. So don't be afraid to ask for what you think you need and then some.
I'm coming at this from a totally different perspective, but we're making investments in companies where the founder entrepreneur is leaving. So I guess my recommendation would be to systematize your company to an extent that it can run without you. That would be sort of the long-term advice and the perspective we take.
Great. So again, we have the room for a while yet if folks would like to stay, so please feel free to do that. Again, the networkconnect.com. You can see future events as well as sign up for the newsletter. And let's give these folks a round of applause.